Hi, it's Chris again with FOREX, where the Forex market intersects with philanthropy. And today is Monday, April 27th, and we have an exciting week ahead. As always, I'll keep saying that every week because every week there's always some profit to be made in the Forex market. And this week is no exception. You'll look on screen here today and see the channel that's been evolving for the past week. And you may recall, if you're following along as devoted pupils, that this line has probably moved from here on up to here. And if you're saying, how come these things move between videos? It's because the market moves, and we don't know, we can't guarantee where these lines are going to be drawn because we're drawing them, and we're kind of anticipating what we think the market's going to do. So I have to go on we as traders have to go on whatever we know at the time. There was a possibility that this was the channel, even though it's not a perfect parallelogram, which I particularly like to see. That's not always the case. In fact, look back last week, you can see how nicely compacted that channel was, and that wasn't parallel at all. It was when we finally drew the line down to here and got this breakout here. So you can make the line work the way you want it to, but remember, you're not the market. Well, we are actually, as individuals, we are part of a larger market, but we alone can't affect those movements. So that was what we were looking at before, and the weekend has decided that this looks like a better place to draw this trend line. So let's zoom in and see what's going on at a more micro level. We had this small channel developing on Friday. This vertical line here tells, I'm doing this to remind me, where was the market when last I recorded a session, so that we can kind of look back and see what happened between then and now. I think that's kind of helpful for both of us. So let's zoom into, let's try 30 minutes. And that might be visually interesting. You can see that we had the breakout here. I'll zoom in a second to show that more clearly. And we had the breakout. It retested about the time when this line is about 11:30 or so on Friday. I tend to do these videos around midday, around lunchtime, or just before lunch in my time zone. And over the course of the rest of Friday and then into Sunday night, we had this small little channel emerging, moving on up to this trend line, which now doesn't tell me that this was a breakout at all. And in large part because it was Sunday night, it just, Sunday seems to be slower for a lot of obvious reasons. But it just wasn't a robust move. It was just kind of a puttering on up, which is why when I said the earlier line was down here, I mean, you know, I can justify it and say this was a breakout. I think moving this up here just gives us more of an opportunity to break out yet again. It's always breaking out at some point. And if I go back to the 1 hour, and again, looking at the long term, the breaking out from this current trend line now meaning in the next session or so when it does break out, conforms to this measured target, this arrow, which is the depth, width of the channel, projected forward from about where it breaks out to intended profit. And intended profit is this ultra high point right here. So when you can kind of make this geometry match up nicely like that, nice and clean, where the profit target is a definitive place to stop, and the span of it is also the depth and width of this, that's kind of the mysticism of it, or the magic, or whatever, all all the elements that you want to see in a perfect trade, all kind of coming together. So that is 120 pips. If we, let's just say, enter at 86 right here and go all the way up to that top, which is 98, that's 120 pips. That's a nice span of profit. I can drill down and show you more precisely where we're at with the pricing. I get questions like, how do I draw the 1, 2, 3? And, you know, how do you know? And so let me answer that and say, you don't. You do the best you can with what you've got to look at. So let's go back to the top of this channel. Now I'm in the 15-minute chart, a little bit more micro viewing environment. And let's see. So top of the trend line, I'm going to expand it a bit so the candles are a bit more obvious. All right. So from get-go, we have the number one point here. And again, we're looking for, generally speaking, we're looking for the candle, the body of the candle itself to firmly touch the line we've drawn. Sometimes it's the wick, the top of the wick. Sometimes it's the candle. Again, we are the ones drawing the lines. The market is providing the candles. So we kind of have to wiggle it and be a little flexible. But already out of the gate, I see 1, maybe 2 points right here. I can do this. I can do this. Let me just show you. 1. Consumes more video time for you to watch me do this. 2. Okay, let's count that as 2 at the moment. Now let's go on down. On down. On down. Keep going. Okay. So, yeah, what to do? We have 3 and 4, which means we have 1 too many. So there's quite a bit of probability here that we've got this trend line confirmed, and maybe back at the top there, one of those points was just counted as 1, not 2. Again, you're going to say, well, there's 4, and like, okay, even better, because the more times it taps our drawn line, the higher the confidence that we were going to have a breakout in fairly short order. So let's just go with that for a moment. I want to go back in time to Friday when we were looking at this smaller channel right here, and we had 1, we had 2, and looks like it broke out on 3. It's again, just not a precise science. Let me zoom in a little bit more, because I get this question, okay, this looks better. So you see the time frame in which you're looking at the chart can make all the difference. So, you know, it looks better on the screen to see it in the 30-minute because it fits the screen, but let's just talk about what really is going on. So I'm going to place the top point here, number 1 at the top of the wick, if I can snag it onto that, okay? 1. I see 2 and 3 together here. We could call that just a good number 2. Oh, I'm sorry, that doesn't sound right. We could just call that a 2 or a 2 and a 3. And yet we have another tap here. So we've got plenty of candles touching this trend line. It broke out, not robustly, but it crossed the line and closed above it. That's the critical thing. When the candle, even if the wick extends beyond it, that doesn't matter, because it's the next candle if it closes, and that's this high point of the, let me show you this a little bit more clearly here. Hopefully you see that this looks like a candle. You've got this trunk, and then you got this little wick sticking up on top. It's a candlestick. So the wicks can cross the line all they want, but if the candles close or remain solid below the trend line, you don't have a breakout. So when this shot through, one could go, whoa, it's breaking out, yay. Well, no, it didn't, because the next candle closed right below, right at the trend line, and it hugged it before pulling away. So you really want to be sure that you have a situation like this, where after 3, and in this case, it appears 4 solid touches on the line. This is one of them. This one closed below. This one kind of straddled it. But this candle here opened, closed into the day above the trend line. And that is a way to indicate you have broken through it. And breaking through means it's going to now move on in that direction it's heading. And look at all these other candles. They've all closed and opened above this trend line. So that's why I put this circle here. That's the moment when it crossed and remained on the other side. We call it a breakout. So I'm backing out because sometimes it's just too much to see it too closely. Okay. Okay, great. So by the time I was recording this on Friday, we were here, we'd had the breakout. I knew we were getting close to close of market. Not much was going to happen. So happy weekend. So now let's pick up what did happen over the weekend. And when I say weekend, I really mean from Sunday afternoon until, through the night. We had this small little thin channel emerge here. And I'm going to go to 5 minutes. See if we can make all this fit. It's not going to fit well. I'll tell you what I'm going to do. I'm going to take me out of the picture because I'm tired of that. And I'm going to move my little dialog box up here, which I don't think you can see. Okay. So here in the 5 minute time frame, you can see from the breakout. Again, don't look at the line, don't look at the pricing here because it doesn't match it, because we're not in the, again, the right time of the chart for this breakout now to make sense, but it did when we saw it a minute ago. So that was in 15 minutes. So just don't look at that right now. We want to look at the fact that we've got this nice parallel coming along here, and it double topped, maybe even triple, but it stalled. And right on this trend line too. So it's like, oh, close to breakout, but not quite. Pulled back and touched this trend line here. So this is as of this morning, as I am looking at, let me just take like 1400 hours and to use European time. Well, I don't think that's quite accurate, but somewhere in this area here, I saw this pattern and like, oh, okay, we have a small channel, we have a double top. This is going to pull back off the trend line. We're not going to have a breakout right away, a major breakout like we're looking for. We're going to have a pullback to, oh, I don't know, let's say here, green means profit. And why did I draw it there? Well, let's see, because if I take a trend line, a small little vertical line, and I just say, okay, measure the depth of this little channel here. Okay, you see I went to the little toolbar and I clicked on draw a trend line, and I took it straight down from top trend line to bottom trend line. Now I can move it and wiggle it over here where the break, and bring it to where the breakout is. And actually, the profit target on that could have been down to here. And it still might, because this doesn't look like, this looks like it's going to continue on down. I might have taken a more conservative approach. This is a recent low point. It's within this measurement here. It did hit it firmly and bounced. From 84 down to 82, that's 20 pips. I may have taken 20 pips if I were trading that and taken profit and quit. That's just a small little, mini little trade I could have played. It might go longer, possibly will. That's okay too. But what I'm in for is not this little small thing, although this is how, you can do little baby steps, little small trades like this, perfectly fine. That's why I present all scenarios. But trading this downward right now is counter trend. And what I mean by that is the larger, more significant time frame of a trend, which is this monster here, this whole thing here. The more significant or long term that is, the the breakout to the upside is imminent. So if you want to do a little short here from here to here and make some profit, that's totally doable, because you can buy and sell this market at the same time. Actually, not at the same time, and I can explain that in a second. But you can place a buy or a sell in any time of day and make profit. Let's put it that way. Two distinctly unique trade orders that I need to say. So it's counter trend, meaning it's going this direction for even if just a brief moment. But you want to be careful, particularly toward the end of this long movement, because as it's going to pull back, it may just sort of tap that real quick and pull on up. So I would just use caution. During this whole time frame here, I see downward and it broke out, and I see upward and it broke out, and that's all fine and good. But when you're getting down to the wire here, and remember I talk about how the coiled spring starts to appear, when you start to see a lot of consolidation at the last minute, all this boom, 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 boom. And again, another signal that this is ready to pop out. So where do we enter? You know, I do it visually. Some say, no, it has to be 12 pips above the blah, 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 blah. And you can come up with a algorithm all your own, and that's wonderful. If it were to break out, if it were just to like literally shoot up now, right now, it would hit 85 and take you into the market. If that were your profit, if that were your entry, if you had your entry down here, you're practically on the trend line. Dangerous, because if this coiled spring isn't ready to pop yet, it might hit it and bounce back and hit it and hit it and hit it. So that to me is too close for comfort. So 10 pips further is 86. And it's far enough above the wicks, previous wicks that we're crossing, because the wick will, you know, if the wick touches the entry line, it will take you into the market, even though, you know, had the line, had I placed this order right here and the wick hit it, I'd be underwater because it hit it and then immediately went negative. So I like to keep it a little bit of a distance above the trend line. I think 10 pips, I don't want to go below 10 pips. You could be even safer and do 865. Okay. Now I think that's a lot safer, because then it's above all the noise here. It's it's way above that. That's 5 pips. And you know, what does 5 pips translate into dollar wise? You know, it's some money, but so for now, I'm just going to keep it at 86. And partly why, because this hasn't hit the line yet again. And the lower it gets before it breaks out, you know, 86 will be more than 10 pips. It'll be, if it enters, breaks out around 84, then that's 20 pips difference. So you can always move it when you're on your trading platform. You can modify the entry. You can move you can move this anytime you want to in your order, except when you're in it, and then it's too late. So you could even just, you know, cheat it downward if you wanted to really hug the line here. So for now, I'm happy with that. Again, it's a little arbitrary. It's a little bit visual. And for now, I'm going to hold to that. And again, it's a nice round number. That's just one of my things. Okay, so what else do I need to talk about? Let's see. This was moving up. Well, I think I see something else. Teeny tiny channel. Again, not going to trade it. But that could be your one trade for the day, and wouldn't that'd be fun, you know? What I see is, again, I'm in the 1 minute chart now. And hopefully as I do these things, because I know we're not interactive because I'm recording it and you can't raise your hand and ask questions. Okay, that's a nice upper trend line. A lot of conformity there. Let's just clone it and drop it down. Okay. You can see where this could break out and go like, God, just barely 10 pips, if that. Another way to look at this one would be to draw the line differently. Did it break out? Oh, we'll see now. Again, optical illusions. Here, I was thinking this little thing hadn't broken out yet, but if you, well, I don't know, I don't want to make this too hard to read. If you look at it from this perspective, you've got all the touches to the line here, and then you have a breakthrough. So this little thing may be breaking out as we speak. That's nice. That's not a lot of pips. It might take you down to this point here, where there's a lot of previous support. And then maybe when it does, it'll form a new double bottom. This will be 1 point, this will be 2. And when you have a double bottom, you have a signal that you're now going to pull back up this direction here. So yeah, that's showing you that even on the most micro moments, if you just want to do like 1 minute charts all day long and just get like 10 pips here, 10 pips there, that's, you know, that works. Everybody has their own range of like, I want to get in, I want to get out, I want to go play golf. Oh wait, you can't do that. Not in Palm Springs today. So yeah, you can do that. Again, I remind you that those are the trees. Those little trades are the trees, and then there's a forest. And sometimes those trees do not do what you want or expect because the forest rules. The forest is telling you, no, 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 we're not going their way anymore. We're going to just break out. So I just have to present all sides here. Then you have to zoom out, zoom in, zoom out, zoom in. You can see these channels every which way, and you can profit from each one. I mean, if I was totally just glued to this, I mean, I could have scalped. And I say scalp, I mean, it's literally what you're doing is you're just like, you're in and you're out, and you're just grabbing all the pips you can. I mean, I could have made far more money than I'm making. But that's a whole level, that's a sport. Let's call that a sport where, you know, you're hunting and gathering. And, you know, even with all the time in the world right now, I'm enjoying the comfort of that possibly, if not today, sometime tomorrow, we're going to be heading to 120 pips, which is, you know, easily $1,200 if one is trading a standard lot. You know, so for about a week's work, if it's a week, $1,200. You know, it's all about your needs. It's all about what you want to raise money for and what you need personally. So it's not for me to say, but I think the longer moves are so much more rewarding that you don't need to like have caffeine finger on the buy and sell buttons and scalp your pips. But that is available. So just I have to present all the sides. All right, so I will, how about this? I will move this line forward. This is new. I'll move this line to here because I will sign off. And when we come back tomorrow, 24 hours forward, we'll come back to this moment in time and see what happened. And I will be very excited. I'm projecting some optimism into the future that we will be on our way up. And probably the first place that breakout will go is at a level consistent with this. Do you see all this activity here? Previous ceiling right across the tops of these wicks. It hit that. So I would say when it breaks out, it'll go up to, let's call it 88 or 88.5 or something, right in here, before it pulls back and retests this trend line and then bounces on all the way up. So I would say, yeah, right about here, I'm going to just call it 88, is probably where the breakout will hit. So if we enter at 86 or even a little bit lower by then, I would plan on it going 20 pips up to this point and respecting this previous level of resistance, meaning it's hitting the ceiling. bouncing back, but then ramming on through all the way up, maybe to this level here, because it's a previous high. I could see it hitting there, right about here, maybe bouncing off of that. So there could be, it's a staircasing thing. So, I mean, it'll hit here, pull back, hit up here, pull back, and then on the third push up to here. That's why these things can take a day or so, because you got to wait for it to pull back. And what's great about the pullback, and this is true in the stock market too, is, you know, you're buying in the dips because the market is in waves, and so there's a sell-off, buy at the low, sell at the high. So, you know, some people will, you know, would buy here and then sell at 88, then it pulls back to whatever, and buy there. And that's another way of doing this too, where you could actually get 2 or 3 trades out of this move. I'm not going to do that myself. I know where it's likely to head, and I'm happy with that. So I just would like to sit back and watch that happen, and then talk to you about it daily on where you can see opportunities. If you didn't get in here, you can get in here, you can get in here. So you can always jump in the market for some amount of pips. All right, I think I have run out of pips of my own here, and we'll sign off for now. And as always, please click the like button. I'd like to see more likes. I know there's about half a dozen people watching, so I'd like to see a half a dozen likes, if that would be not too much to ask. If you haven't subscribed, please do so. I noticed I went to my channel and I couldn't find the subscribe button, so there you go. You'll learn as we go here, but I'm hoping it's there and that I can't see it, but you can. So please click the subscribe button. That way it just makes it easier for these videos to pop up every day and you see them. Plus it's a good way to track my activity with YouTube. And what else do I need to remind you of? Demo accounts. I know of now 2 viewers who actively have a demo account and are trading. I'm very excited by that. And I had some one-on-one conversation over the weekend about specific things, and I'm happy to do it because when the market's open, I'm in it. So I'm not doing anything else. So I'm happy to talk to you one-on-one about getting yourself set up, any specific questions. It's hard to do a video about it because each scenario, each situation could be different depending on your broker. And I don't want to speak unilaterally for what all brokers are doing. So I'm happy to talk it through with you if you want to reach out through the Facebook Messenger, which again, don't forget to like that as well. That's where I post the links to these videos as well as other commentary. So a lot of little homework items for you to do and keep doing. And we'll come back tomorrow, and I look forward to seeing some profit moves right here. And that's what it's all about. All right, take good care, stay safe, and I will speak with you soon. Thank you again.